Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update video. And for those of you that are new to the channel, we release one of these videos every single day at 1 p.m. UK time, where we not only look at the cryptocurrency market, but we look at the macro landscape, the macroeconomic landscape around the cryptocurrency market, and see how it may affect our market. You know, last year was a year filled with people throwing the term macro about, and the reason being is because ultimately what the Fed were doing, what was happening with inflation, was really driving markets, and saw markets actually look to de-risk into where we currently are. Now, yesterday we looked at how the CPI had affected where markets thought rates were going, so the implied rate hikes that markets were sort of now looking to price in. And after that very sort of stagnant CPI print, we did get a slightly higher for longer tone to where markets thought rate hikes were going. However, Bitcoin really did not give a damn. And we're going to be talking about it because technically there's some very interesting things taking place for Bitcoin. You know, we spoke about this reverse head and shoulders, which can occur and often do occur at a trend end. So they're a reversal structure from the prior trend, i.e. in this case, a bear market that we've been in since November, to potentially some sort of a bull market. Now, this lines up very, very nicely with all the things that we were highlighting at the start of January. And the reason why on the 1st of January, we took a non-bearish approach after being a macro or a perma-bear. Perma-bear is not really the right term, but very bearish the year prior. And we saved a lot of money as a result of that. And actually, as a group, and it's the only time I'm going to mention it on this video, we did actually allocate and have done very well since the start of the year. Anybody who wants to find out about my group, there is a link in the description. But we're going to be looking at a number of things as well. We're going to be looking at Grayscale's GBTC. We're also going to be looking at Bitcoin against gold and Bitcoin against the S&P, because there's some very positive signs coming for Bitcoin. You know, you can see that the stock market since the CPI print, along with the dollar, along with gold, has been somewhat, you know, so-so, because the print didn't really give much of a confirmation to the rally that the risk market, gold, the down spiral with the dollar had seen. And we do have a dollar that's reasserting. There's also some very interesting things that I want to cover at the end of the video going on internally with the crypto space. Bitcoin single day price surge linked to billions in US dollar inflows. So we saw a massive amount of US dollars flow, or USDCs, Circle stablecoin flow into exchanges. Now we know what's going on with obviously BUSD. We covered it, and of course, you know, Kraken and the SEC sort of clamped down on the crypto space. So is there an element of people, potentially smart money, knowing that USDC is in a little bit of trouble, or may come under scrutiny? And this is all speculation, and I'm not saying this is going to happen, just it could be why we're seeing this. Or is this institutional money, large players putting their money back onto exchanges in order to swap it for cryptos, sort of in the expectation that this market's going to continue higher? Maybe the GBTC, which of course is preferred by institutions, it's one way that institutions can get exposure to Bitcoin in a regulated manner, you know, may also be pointing to this. So let's get into it, guys. At the start of the year, we really highlighted a number of things. We highlighted a bullish divergence for Bitcoin on the weekly RSI. We highlighted things like the market cap of, or the dominance in terms of market cap for US DT, so Tether. You know, there was a bearish divergence on this, very correlated. We highlighted things like how inflation was coming down, and we were likely going to get that lower print, and that was going to fuel markets. We got all of this looking forwardly, using the 2-year yields to determine where rates are going and saying they're not going much higher, and that markets will front run cuts that are now being priced in from the start of the year towards the end of it. Now, whether that's the case or not is yet to be seen, and if markets have got that wrong, they may need to reprice. But in the same way that markets front run rate hikes by selling off and adjusting for that risk factor, they'll front run rate cuts, which is potentially what we're seeing a little bit of. And we spoke about a number of other things. We spoke about the real risk is a demand killing event, like the yield curve is predicting, but typically this doesn't play out until a point of uninversion. And actually, to add to that list of positive signs, we now have what we've been highlighting, and we actually highlighted this yesterday before we had got this kind of monster rally. We've been highlighting it for a while. We've been highlighting it actually since we were up here. We've been saying essentially what we're looking for is a reverse head and shoulders at a key inflection point for the market. And that looks to be playing out. The conviction in this move that is taking you back above this neckline, I think there's something to be said there in just how fast this market has moved up. And it's been at a time, crypto's been doing this whilst the stock market has stayed relatively stagnant, but in my opinion is looking for more continuation. The dollar has actually been strong. And this is, and you know, there is the potential for more dollar strength, but the cryptocurrency market has rallied in the face of this. Now, one thing I'm paying close attention to, of course, is the yields, 10 years, which lead the dollar, and of course the 2 years, which if it has topped out over here, implies that rates aren't going much above 4.9%. So 5 would give us the next 2.5 or 25 basis points, and then potentially looking for another one would take you to 5.25. Which is in the realms of possibility, and I think markets are somewhat accounting for this. Anything higher, they would kind of throw a bit of a wobbler. But ultimately, crypto's been doing very, very well during this time period. And we've got what we were looking for. We actually bought pre-CPI. So before we even got the print, we made the decision to put some money on the table. It's done very well from there. Again, you can find out and be a part of that by joining my Patreon. It's the same price as like a monthly subscription for something, and believe me, you're going to get a lot more value than I'm sure you do out of some of the things that I can only imagine some of you are subscribed to. But looking at this, you know, what's next? Well, if this is indeed a reverse head and shoulders, you could potentially be looking at, with this break, some sort of a run back into this region. So if you do have this as a breakout and this is a confirmed break, then potentially you're looking at continuation to the upside that is going to take you back into this area here. So it's not going to be in a straight line. The fact that we've seen Bitcoin perform like this makes it very hard to position, because you don't want to buy something that's literally just gone up in a straight line, that's sort of consolidating right around what can definitely be considered resistance. You really want to see this hold, this sort of 24K range. Doesn't have to hold perfectly, but you want to see something like this take place where you set up and then you see that continuation and we look for that upside. Head and shoulders reverse target would take you to around about 32K in this region here. It's very plausible in my opinion. Certainly if we keep getting the kind of economic data that we've got, that is going to really spur on this soft landing narrative. Any changes in that, however, you are going to have to be observant and look for essentially any kind of market change in terms of rates then being implied. You know, I do think we are going to have a bump in the road with inflation at some point. However, there are other metrics that suggest inflation really is coming down at more of an aggressive manner. So this is really the path that we have set out for Bitcoin, and hopefully you guys that have been following the channel for a long time now, you know, you've done quite well over these past 2 months, and long may it continue. You know, this could be the year. Last year was really all about protection in terms of our capital. This year's all about growth, in my opinion, certainly as we see risk become a little bit more appetizing. We do have somewhat of a strong dollar, which is to be watched. You know, you're in a key sort of area of what may act as resistance here. So maybe you get a bit of a pullback. This would support risk, which largely hasn't been doing much. The S&P actually looks pretty good. One thing I was watching, however, was the VIX, which I'm not majorly happy about, because this could rear its head. If this rears its head, it means the stock market's likely going to sell off, and potentially it is overdue that. But how does crypto react? And so far, we've seen it do very well. And actually, if you look at crypto against the likes of gold, this is stuff that we looked at a while ago, you can see it's actually doing rather well. You know, it's broken out of what is potentially a falling wedge. Also, again, we drew this. You know, you've got this against the stock market. Is it crypto and Bitcoin's time to shine? This is all coming around at a time when the SEC is looking to regulate the industry. And potentially, we've said, even though this was taken of course, by the bears as very bearish, there's a massively bullish undertone with what the SEC are doing because it gives a lot of credibility to the industry in regards to it being taken seriously. And you have all this institutional money that cannot get inside the crypto space, certainly within the US, without it being regulated, that right now is licking its lips and looking for to shake as much retail out as possible. I can't help but feel like FTX and Sam Bankman-Fried were a real Trojan horse. So that's what we're looking at for Bitcoin moving forwards. You're at this key level here. Personally, I wouldn't chase. You really wanted to be positioned into this. But lots of people out there that feel like they miss out. I know there's many other channels out there that are still exceptionally bearish and still waiting for lower lows. And maybe those lower lows come. We're not totally ruling them out. But there's a huge risk with just doing nothing. And, you know, largely that was the stance that we had last year. But if you just sit on the sidelines waiting for low, one time you're going to be wrong and you're going to miss out on what has been nothing short of an epic rally. I mean, this is Bitcoin. There's certain altcoins out there that we're 200, 100% plus up on. And we're actually looking for more continuation. For people that do feel like they miss out, you will get a pullback at some point. It will be a lot more sustained. However, the real question is, does that pullback take you lower than where we currently are? You know, do we see that next leg up and then we get a pullback around this range, which will give you head and shoulders targets, and it's something like this, which is more sustained, and then we see it, but it doesn't quite take you back here. You know, it's all still to be seen. Last little bit of news I want to cover, guys, is Bitcoin single day price surge linked to billions in USDC inflows. Bitcoin's proponents called it the start of another bull run, while a few other analysts believe it's a bear trap. I'd still say there's a lot more people believing this is a bear trap than a new bull market. And anybody calling this a bull market, we've given you the criteria for it being a bull market. You know, a bear market is a concession of lower lows and lower highs. A bull market is, of course, the opposite of that. So you need to do something like this, and then we can start looking at a potential bull market, you know, taking place with putting in a lower high, a higher high, which I don't think we've quite done yet, because I'd say this is the high that we have to beat. But we have certainly put in what may be a lower low. We're going to put in a lower high. You know, then we can start talking about bull and bear market. Also, we've seen a really good inflow into Grayscale's GBTC. Again, bullish divergence on the chart. But this is certainly interesting. Many attributes to Bitcoin's price surge to several factors, including the rise of the in dollar values and declining inflation. Yeah, so we spoke about all this. According to data from Luke on Chain, nearly 1.6 billion in institutional funds have flowed into the crypto market over the past 6 days. Most of the $1.6 billion flowed from stablecoins, especially Circle's USDC. The owners of funds first withdrew their USDC from Circle and then sent it to various exchanges. So this is certainly interesting. There were 3 notable wallets whose funds were tracked from Circle to various exchanges. First, a wallet address starting with, that'll be a Ethereum address, withdrew 155 million USD from Circle and transferred it to an exchange on February the 10th. The second wallet, starting with something else, did nearly 400 million in USDC and sent it to various exchanges. And then we get a 900 million getting sent to exchanges. So this is certainly interesting, something to watch. You know, is this institutional money flowing back into the market? Well, we might have seen it from GBTC or getting ready to position back into the market. However, this could have something to do with all the regulations that are coming and the fact that we've seen stablecoins get targeted in the forms of BUSD. You know, this could be institutions looking to exit their USDC positions in preempt of something. So that's all I've got for you in this video, guys. Hopefully you've enjoyed this content. If you have, a like is always greatly appreciated. So is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Thursday, guys. See you in the next one.